Hey friends, welcome back to another episode of Making Sense of Your Market. It's Friday, March 24, 2023. Really big week this last week. So I'm going to give you a week in review. A lot happened. I just left touring the venue that I'm going to hold my client appreciation party this month. I'm super excited to celebrate all my clients that have recommended us and supported us. So I've got a client appreciation party next Thursday, opening night for the Mariners. We're gonna do a Mariners watch party, have it catered. That's gonna be incredible. The other thing is I need your help. Next week, I'm hosting a first-time homebuyer class. Next Saturday, I think it's April 1st. You can go to happyhomebuyerclass.com. This is where I really need your help as a past client and a current client of mine. I teach these homebuyer classes. I've been teaching them since 2012. Prior to me getting into the mortgage industry in 2008, I was a college professor. I have a passion for teaching and helping people. And when it comes to buying a home, there's so much that I have to offer in regards to advice and strategy. And we share that at these classes. The number one thing right now, we've got the banking system that's going through some turbulence, some issues, big issues. In fact, the government's coming to bail them out. We've got a real estate market that is hot one day and cold the next, and then back hot again. We have interest rates that are through the roof, and then they're coming down. There's a lot of question around where should my money be right now? How do I create long-term wealth if the stock market is crashing, or if the stock market and crypto are down? Guys, I can tell you one thing. On Instagram last week, I posted a 79-year chart. 73 out of the last 79 years, real estate has gone up in value. Real estate is going to continue to go up in value because it's tied to an asset. It's tied to someone's home where we need to live, where someone needs to live, okay? As interest rates continue to come down, as more people continue to move to America, as more people continue to graduate college and enter the workforce, home ownership is going to be even more desired. So I don't see that going down. I'm doubling down in real estate. I have personally been a real estate investor. I'm continuing. In fact, I'm buying a place right now. I believe in real estate. I want to encourage you. If you're worried about your money, if you're wanting to buy your first home in the next year, come out next Saturday, happyhomebuyerclass.com. Have brunch with us, okay, and learn not just how to buy a home, but why you want to buy your first home, how to get into it, how to leverage real estate as a part of your financial portfolio or wealth creation strategy. I promise you, you're going to learn a ton and you won't be disappointed. So if you've already bought a home with me and you're a client of mine, please do me a favor and share this information with someone that can help, all right? This is another thing that you'll learn in the class. Last week, mortgage rates went down, but the Fed raised the Fed funds rate. Let me say that again. The Fed raised the federal funds rate by 0.25%, but mortgage rates went down at the same time. I fielded over 20 phone calls. How in the heck, Dan, did this just happen? I don't even understand this. Well, the first thing that you have to understand is the Federal Reserve, the Fed rate, is not directly tied to mortgage rates. It's indirectly related to that. Right now, you've heard me say this for the last 3 months, maybe even 6 months, that mortgage rates are tied to the inflation rate right now, meaning higher inflation, higher mortgage rates. Inflation comes down, so will mortgage rates. If you don't believe me, or if you want to check me on that, go look up inflation rates and go look up mortgage rates, and you'll see as inflation has gone up over the last year, so have mortgage rates. But when inflation comes down over the last 4 months, so have mortgage rates, okay? The Federal Reserve coming out and raising the Fed rate showed investors, it showed Americans that they are truly committed to bringing down inflation, which is good. You need to know this as real estate agents, as home buyer clients of mine, as homeowner clients of mine. You need to know that this is good news because as rates go down, the housing market will get cranked back up. We're already seeing in March multiple offers on homes. The spring market showed up in February, you guys. So another reason to come to the homebuyer class or to encourage someone that you know to come to my homebuyer class is you'll learn things like this. Information like this will help you get a better deal on real estate. It'll help you make a more informed decision on when and where you buy versus just how to buy, all right? I hope this information was helpful. 30-year fixed rates, week over week, they're down. I always give you kind of a range of what rates are doing. So we're right at about in that 6.6% for 30-year fixed. Government loans, they're down. So VA and FHA down in the 5s. So this is not a rate quote, it's a range, but it's an encouragement. They're coming down. So if you have any questions, reach out to me. Please help me out. Share this information with someone that can help, someone that might need to or want to attend a home buyer class. And I'll see you next Friday with another update. Bye for now.